Okay, today we're going to talk about something really exciting, and that is the trading tendency of Vwap. What the heck is Vwap? Well, if you look at Wikipedia right here, you'll see Vwap is the volume weighted average price, Vwap. It's the ratio of the value traded to the total volume traded over a particular time horizon. So basically what they do is they put everything in a basket and they figure out how much got traded at a certain price, and they average that out and they create a value. And they chart that, and you can see that on my chart. In other words, let's take a look at my chart. I've had this 15-minute chart of Apple. I'm using Heikin-Ashi candlesticks to really accentuate the trends. And so you can see dark red trends, and those are downtrends, and you can see some of these green uptrends, and those are the uptrends. And then you'll see this dashed line, this orange line. See that? That orange line represents the Vwap. And I track Vwap because what happens, and I get really excited about this, but I often forget about it, is that stocks have a tendency to try to trade toward Vwap at the end of the day. I don't know why. I just have noticed that that's what happens. Actually, I do kind of know why. Here's why. Institutions say, listen, I want to buy 100,000 shares of Apple today, and the brokerage firm will say, great, I can guarantee you Vwap. And so their whole job is to try to trade around that position so that they can give them an execution Vwap, because they're on the hook if they don't give them that, or they get to make the little bit of P&L if they do give them that. So there's some kind of crazy game with soft dollars and hard dollars and all that stuff that people play on the street. But bottom line for you to know is that the price tends to go toward Vwap. So let's analyze it. Let's look at Apple today. Here's Apple today. You could see the whole day it traded in a downtrend, right? Mostly downtrend. A lot of red candlesticks here. It did have one pop up here around lunchtime, a little after that, and then it stayed down the rest of the day. But look at the end of the day. It all of a sudden made a volume move toward Vwap. If you look at the volume on Apple, and I'm not going to pull up the chart on that, but you'll see that it made that move. And look, it closed right here. Vwap is 591.75, and the close on Apple, eerily enough, is 592.23 after spending almost a whole day under that line. So it came back to that. All right, so I'm not going to murder you with all of the different Vwap prices, but look at this. Here's the close of the day. There's Vwap right next to it. Here's the close of this day. Pretty darn close to Vwap, maybe a little bit above it. Here is the close right on Vwap. Here's the close here, right on Vwap. And looking at it here, didn't quite make it up. It tried, and maybe it did actually, that candlestick actually did cross it. So it's really close. Look, it happens almost every day. Interesting. Let's look at another stock. Let's look at Google. All right, Google, look at that. Did the same thing. Here's Vwap right here at 515.66. Google closed at 517.11. Pretty darn close. Here it is at, let's see what it is here. 528.08. Google closed at 523. You can see it right there. You can see it right there. So, of course, actually the close is down a little bit over here, but you could see within 15 minutes it was right there. So it made that attempt to get there. Let's see, it's hard to tell what that is. Here it is at 4 o'clock, is at 5:36, and Google closed at 5:34, just $2 off. So there it is again, pretty close, pretty close. Gosh, what the heck is going on here? Well, I'll tell you what's going on. It's the way that the institutions buy and sell their shares, because they don't want to scare the market either way, and they try to buy at Vwap because they figure that's the safest and easiest way to get in and out of a stock during that day. All right, what does that mean for us? Well, what it means for us is that if we were to want to understand and use that as a rule, we could set it up as a trading rule and say, you know what, from 3:30 to 4 o'clock, I know that stocks are going to want to trade back up toward their Vwap, so I can either enter into a stock trade or an option trade to get a little bit more leverage, and making sure that I keep my stops in. I'm going to go try to trade in the direction of Vwap. So if the stock is below it, going into the end of the day, maybe at 3:30 or 3:45, you might want to buy some calls. And, of course, you have to take into account what the market's doing, but understanding that we trade for odds and probabilities. And if the probability is that most of the time trades kind of tend toward their Vwap at the end of the day, well, take into account some of those other pieces of information, like where the market is headed. If it's in a big deep dive, you certainly don't want to be buying calls. But if it's kind of hanging flat or it's been trending up, probably a good indication or a good confirmation signal for you to go ahead and enter into some calls or buy some stock going in toward that VWAP. Conversely, let's say a stock is above it toward the end of the day. Let's say it's that Google right here. That would have been a good one to buy going into that final VWAP on the upside. And I'm sure we could find one on the downside. Here's one on the downside. Here it is, Google trading all day long, had a big spike up, and then toward the end of the day, right at the end of the day, it made its move. So you could have bought puts, or you could have shorted the stock. And again, you got to kind of take into account what the general market is trending as well. So that's how you trade VWAP. It's not a lot of press for VWAP because it's more of an institutional tool. But as a trader and a day trader, a position or swing trader, you can certainly use VWAP to your advantage. Good luck.